Welcome to this video on global shifts, Indian gains. We will explore how easing West Asia tensions and cooling global AI trends could uniquely boost the Indian market. Let's begin by understanding the big picture, a simple breakdown of the current global landscape and its direct, positive impact on India's economy. Talks of a peace treaty in West Asia are calming global markets. For India, this ensures the Strait of Hormuz remains open for crude oil and natural gas trade. Two numbers matter right now. Lower Brent crude oil prices at $98 help control inflation and the national deficit. Falling 10-year bond yields at 6.99% indicate market confidence and cheaper borrowing costs. This creates a ripple effect on India, leading to lower oil prices, controlled inflation, and stable interest rates. This helps reduce import bills, stabilizes prices, and makes managing EMIs easier. Now, we will identify the sectors and companies perfectly positioned to grow from this favorable market shift. The banking and finance sector benefits from dropping bond yields, which increases the value of government bonds held by banks. Affordable loans also encourage business growth. Oil-reliant businesses also win. Cheaper crude oil reduces their manufacturing and fuel expenses, directly boosting profit margins without having to raise product prices. There is a global shift away from AI. As the AI trade becomes crowded, foreign investors will seek new, reasonably priced growth areas, making Indian stocks an attractive bargain. Over the next 18 to 24 months, watch for the Middle East easing, a drop in cost pressures, the global tech industry cooling down, and increased money flows into Indian sectors like banking and logistics. As Prashant Parota, portfolio manager at Allspring Global Investment, states, India could attract renewed interest as investors search for opportunities outside the dominant AI theme. Thank you for watching this video on India's market opportunity.